So I'm going to do that. Can you hear me now? Is that better? Fire off in the chats if you can hear me now. Is that better? I hope it's not my Wi-Fi. Yes, awesome. Okay. Thank you so much. I do apologize for it. Thank you. Hey, Sherry, thanks for jumping on. Good to see you all. So I'm going to just back up a little bit. You know, I thought I did my intro spiel. It's Tax Tip Tuesday, and I am coming to you live just to share a quick tax tip with you on today. It is your girl, B. Valise, with Tried and True Financial Services, where our core mission is helping entrepreneurs with the ABCs of finance to simplify your accounting, budgeting, and credit processes. I do thank you for my audience that's joining me today that helped let me know that we were having some technical difficulties. But today we are going to be talking briefly on the subject of QBI. QBI, the QBI deduction. If you guys are not familiar with that, QBI stands for Qualified Business Income Deduction. It is a deduction that business owners are entitled to. Most business owners are entitled to. There are a lot of nuances with this deduction. And so I'm not going to get into any technicalities and technical details with the QBI deduction, because that's why you hire your tax professionals, those of us that stay close to the tax law, those of us that study the tax law, those of us that know the tax law. However, the reason why I'm bringing this to you today is because I do think as a business owner, you should have some level of awareness, enough to be dangerous, right, about the types of deductions and credits that you're entitled to, so that as you're reviewing your tax documents after they've been completed, you can look at them and kind of make sure. And a simple question to your tax professional: hey, how much did I get on a QBI deduction this year? Just to let them know that you are knowledgeable enough to, dangerous enough to ask just those simple questions. But the QBI deduction is a qualified business deduction, and most business owners are entitled to it. There are some exceptions, right? And so those exceptions are people like architects and engineers that are not eligible to receive this deduction. And the qualified business deduction is a flat, or it's up to 20%, right? It's not a refundable credit or deduction. So if your taxable income is already down to zero, then you're not going to qualify for it. But if you have at least 20% or more of taxable income, then you will be eligible for the qualified business income deduction. And so you must be, number one, a pass-through entity. We use this language. I know it's jargon, but it's real simple. And it basically just means that the income is passing through from your business to your personal tax return. Okay, pass-through entity. So that's basically all business structures except for the C Corp. So a pass-through entity is whether you're operating as a sole proprietor, whether you're operating as a partnership, S Corps, LLCs, limited liability partnerships. Those are all pass-through entities. So that's why I say most business owners fall into that category. All right. And then you have to have qualified business income. You can't have qualified business income. So this doesn't mean interest or dividend income. It has to be qualified business income, income that you've earned from your business. Qualified means that it's earned income. Okay. And then you have to have taxable income. Again, I mentioned earlier, it's not one of those deductions or credits where it could cause you to receive a refund back if you ordinarily wouldn't be entitled to one. But if you have income that's being taxed after all of your expenses have been taken off, and you still have net profit, which will turn into taxable income, then that's when that 20% QBI deduction will kick in. All right. And so then you also, there's income thresholds. And I'm not going to get into the income thresholds because that's too much information. That's TMI, more than what you need to know. That's up to your tax professional to know all of the little nuances and details. But I do want you all to know, and the beauty of the QBI deduction is that you don't have to do anything special. If you are a specified service business, a service-based business, you're providing a service, then you're eligible, you likely are eligible for the QBI deduction. And so that's a 20% deduction that hasn't been around for all that long. It's a fairly new tax law that is in for the benefit of small business owners. So you should know whether or not you're receiving a QBI deduction, and it's up to 20% of that taxable income. So again, it's kind of like a bonus deduction, right? That was recently implemented into law for small businesses. Small business is one of the best things that you can do as far as the tax code is written for the benefit of small businesses. Right? The tax code does not favor a W-2 wage earner. It does not favor corporations because they get double taxed. The tax code is written in favor of the small business owner. So all of us that are in the small business space, those of us that are aspiring to be small businesses, just know that there's a lot that's written into the tax code for our benefit. The QBI deduction is one of those. And so you kind of want to make sure that you have an idea of the type of deductions that you are eligible for your niche, for your specific industry, and your tax professional should be having those conversations with you, or you should be able to look back at your tax return and see the types of deductions that you've been taking over the years, and QBI should be listed there. Please, 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 I implore you all. I understand this might not be your favorite topic, your favorite discussion to have about income taxes, but it's something that is a fact of life that you should care enough about, because if you take some level of intentionality about it with tax planning and those types of things, then you can have a greater impact on your bottom line and keeping more of your money in your pocket. So it behooves you to have to lend some attention to the tax law, the tax code, your tax return, and having a conversation with your tax professional at tax time as you're preparing to get your taxes done, and as your taxes are being completed, that you're looking over those documents, that you're asking questions, even just taking the time to allow them to explain your documents to you and all of the deductions. A simple question of, well, what deductions did I receive this year? And if you want to be even more proactive, you want to contact them in the beginning of the year, at the beginning, when you start earning the dollars in January, and start planning as you go throughout the year. Tax planning and tax preparation is two different things. The QBI deduction is not a tax planning play, because like I said earlier, it's something that's automatic. So it's not something that you have to do with any level of intentionality to receive it. But there are so many other tax deductions and tax credits that, as a business owner, if you plan in advance, that you can be that much more sure about what your bottom line is. You don't want any surprises at the end of the year or during tax time when you're filing your taxes. So you want to make sure that you're getting with a reputable, trustworthy tax professional that's going to be available throughout the year. I was having a conversation with one of my clients just this week, and they were telling me about how they tried to, previously when they were having some challenges, or where they tried to go to a tax office, and they were told, well, it's after tax season, so we can't help you. Well, you want to work with someone who's going to be around. Hi, how you doing? Thanks for jumping on. You want to work with somebody. You guys make sure that I'm using StreamYard, which is a streaming platform that allows me to go live on multiple platforms. And you want to make sure that you save your name in the in the settings for StreamYard, so that when you chat, whether it's on my live or any other platform, if they're using StreamYard, any other platform, that we can see your name. Because sometimes if you haven't put your name in and you haven't saved your name in the settings, then you just show up as Facebook user. So I'm sorry, Facebook user, but I can't see exactly who it is saying hi to me. But hi, thanks for joining. Thanks for always jumping on. And you guys make sure that you let me know if there's any other specific topics that you have questions about. Where tomorrow is the last day of August and we're going into fourth quarter. Can you believe it already? It's the end of the year. It is the end of the year already. So you guys want to make sure, hey, Glenn, why you, now you know better. Don't do me like that. You make sure that you put your name in there so we can know who you are. But y'all make sure y'all understand and know that this is the fourth quarter. If you haven't been intentional with regard to your tax strategy, it's not too late. I still have clients that's coming in doing some fourth quarter tax planning. That is still an option. You want to make sure that you know what your outcome, or you have some level of control of what your outcome is going to be at the end of the year when you get ready to file your taxes. You want to make sure that you have all your ducks in a row, you have all your I's dotted, you have all your T's crossed, and there's not going to be any excuse, because this year I have been coming to you live, I've been sharing tax tips with you, I've been opening myself up, offering free consultations, and then talking to you guys and making myself available throughout the year so that you can make sure that there's no big surprises. Everybody should have their IRS account set up. If you haven't done it already, don't wait until the last minute. Go ahead and set your account up at irs.gov. You want to make sure that you go ahead and go up on irs.gov, set your account up. You want to make sure that you apply for an IP PIN so that you can get your PIN number to protect your the security of your tax filing, so nobody can file any fraudulent returns. It's a whole lot of fraud still going on. You make sure that you have your IP PIN number, and make sure that you understand and know what deductions you are entitled to as the business owner, and those that do require some level of proactivity, that you're being proactive and taking care of those things before December 31st. Again, we got one more day in August, and then we're going into fourth quarter, and then the holidays are going to come. So fourth quarter always goes by so fast. So make sure that you don't wait to the last minute. We do have a couple of key important dates that are going to be coming up in September, and we'll talk about these again. But September 15th, estimated tax payments are due. And then in October, for those of you who filed an extension, your time, the clock is ticking and your time is running out. So if you filed an extension, you want to go ahead and make sure that you get with your tax professional and wrap those taxes up before your extension runs out on you. So today's topic was the QBI deduction, which is kind of like a bonus deduction. You don't have to do anything special to receive the QBI deduction. It's up to 20% of your taxable income. If you have taxable income loans, we're not taking losses in our business. We're in business in pursuit of a profit, to make a profit. So it's my expectation that there will be some level of taxable income that this deduction can benefit you as a small business owner. So if you have any questions or concerns, or you want to talk more about it, feel free to reach out. But I did kind of just wanted to put that little bug in your ear so that you can be on the lookout for it, so that as you're reviewing your documents, you can be on the lookout for it on your tax returns. Go back and pull some of your prior year tax returns and look and see if that QBI deduction was on there, just so you have some insight and know. And if it's not, then you have up to 3 years to do an amendment on your tax return. So you always want to make sure that you're getting all of the deductions that you're entitled to. And if you didn't get all of the deductions that you're entitled to, then find you somebody that can help you get it right, okay? And then you go ahead and do you a nice little amendment and get every dollar that's got your name on it, okay? And so again, this has been Tax Tip Tuesday with your girl, B. Felice. And I am happy to share tax tips with you. I'm happy to offer these free consultations. Guess what, y'all? Just to put a little bug in your ear, free consultations are not going to last forever. So make sure that you get your free consultations in while there's still an opportunity. I love you. I appreciate you all for tuning in. I'm happy to be of service. And if there's anything I can do to help you make sure that you're keeping as much of your money in your own pockets as you can, I am happy to do that. So I am checking out for now. I will see you guys next week. And it's been a joy and a pleasure, as always, to talk to you. Have a good night.